Tuesday, 7th of May. So, dollar index is just trading sideways recently. It's just about holding on to a bull trend line and the midpoint of the Bollinger Band. So bulls are just about in control, but any move below Friday's low of 97.40 sends us down towards this trend line here at 97.25, and I wouldn't even be surprised to see us retest lows in April at 96.75. So this is pretty crucial for the bulls. Aussie versus the US in a negative trend, as you can see clearly from the weekly chart. We know all about that. Lower again on Monday after talk of Trump putting increased tariffs on China as we hit 69.60. There's a good reason why that held. We've got some overlapping fibs here at 69.54. I actually put some fib extensions on that last little rally before we dumped, and it's come up with a 161.8% fib at 69.54, exactly where this fib is. So you can see why there's support here. I don't think it's the strongest support, but having said that, it has held, so we obviously need to watch it. Break below, say, 69.50 or 69.45 will be the next sell signal. We're overbought on the daily chart. I wouldn't take that as a buy signal, but we could bounce a little, of course. Right, the hourly chart, I think, is where we really get our levels from. Here we go. Okay, so we have got a lot of resistance at 70, sort of 70, 15, 20, maybe 17, 50, 25, with some moving average action going on there, trend line, and the 23%, 23.6% fib. So if we were to rally on that oversold condition on the daily chart, watch for strong resistance here. This is definitely the strongest resistance of the day. So if you want to try a short, just stop above 70.30. It's a very, very low risk trade. And if it does turn around, then obviously we could sink quite significantly. Who knows? You could be looking at up to 50 pips profit on the downside if we retest the low at 69.60. New Zealand dollar versus the US. It's the hourly chart again that I'm going to focus on. Clearly in a downtrend for the last month and a half. Clearly got decent resistance now around 66.30, 66.35 from some short-term moving averages and the trend line. Very, very minor fib level there too. So we would need to break above 66.45 to confirm a move up to 66.65. This is less important now, this overlapping fib area, because we don't have the moving averages or the trend line resistance that we did have back here. So we could pause here, but I wouldn't be shorting it necessarily. Actually, I'm just looking at the 4-hour chart over my shoulder, and I'm seeing some further resistance on that chart around 66.65. So it is quite important. Just watch those levels then. 66, 30, 35, 66, 65. Now, break below. We are in a bear trend, of course. So we've got to favour the downside more than the upside, and a break below 65.80 will signal the next leg lower in the bear trend. That's the low from April, of course. Dollar yen I haven't focused on for quite a long time, and there's a good reason for that. We're just in this sideways trend. It's really, really messy with Bollinger Bands and moving averages just going sideways. What can I tell you? We've got a trend line going back to the end of January. That comes in around the 61.8% fib of 110.70.75. If we hold below there, I would assume that is negative, but really we've got to get below the 100-day moving average at 110.60 for this to look more negative. Otherwise, we're just caught up in a net of mess, really. That's what I can describe it as. I think the euro-yen is a slightly clearer picture. I think this trend line is the most important thing to focus on. 124.10, 124.20. So we plunged yesterday and then saw a good recovery. At the moment, the high is 124.09 for Tuesday as I speak. So we would need to, what's this, a little tail down here at 124.25, and yesterday's high at 124.30. So I guess if we get up through 124.30, you don't want to be short, because we might travel back up to this little trend line here at 125.00. It's not a clear state of play, really, but that's my best guess at the levels. The euro to me is just impossible to trade. We are in a bear trend. We have been since January, but you know, you're getting these big up moves. And they're not really respecting any trend lines or fib levels, so it's really quite difficult. You know, there is some movement, but I I'm just finding it difficult to find tradable levels, really. So just going to leave it. Dollar versus the Canadian is all over the place. We're up for a day or two. We're down for a day or two. We are just about in a bull trend, and we are now stabilizing above this trend line. We certainly did use the midpoint of the Bollinger Band as support. So I would suggest that 134.15, 134.05 would be the best support level of the day on that basis. And if we hold above there, then we can push higher. But even yesterday, the gains were not sustained. You can see this pattern: 2 days up, big plunge, 1 day up, and then we close, and then we lose all the gains. You just go through it, and you can just see we haven't really managed to do anything for more than 2 or 3 days in one direction before we reverse. It's great if you're a scalper and you're looking to just fade the moves, but trying to spot a trend and hold onto a position is pretty much impossible. Pound had a great run up on Friday. Yesterday it couldn't be sustained. We dipped to 130.79. We've become overbought. I was pleased with the move in the pound because after we'd broken higher, I did suggest we would continue higher. Yesterday was a bit of a surprise, to be fair. Now, where have we dipped to on the 100-day moving average? You can see we're still in a bull trend. I guess we're going to have to hold the 100-day moving, 100-hour moving average at around 130.75, 130.70. We've been holding just above that. As you can see, we've got the 131.00 as a level. That was this little peak here, and it seems like we're holding that resistance. You can see when we plunged, we held that too. So 131.00, 131.10 seems to be the relevant resistance. We're going to have to get above there if we're going to start a recovery today. As I've said, 130.70 area looks like support. So below 130.60 won't look so positive. Pound versus the yen. I really don't know what to make of this. It's very much a sideways trend for the last 6 weeks, as you can see in this little section here. Holding the 500-day moving average at 146.61 at the moment, which coincides very closely with the upper Bollinger Band. 200-day moving average and 23.6% fib support down at 144.65, sort of 60.50, and anywhere in between here is just nothing, sort of no man's land, really. It looks like the 55-day moving average has been doing a bit of a job as a level. That comes in at 145.95. So I think those are the levels to watch. Gold trading levels have been fairly reliable. We got the neckline here at 1286, 1287. We got to 1285.5. So that resistance certainly held. I'm not sure if it really gave us a chance to get short because it stopped just below it. But obviously this area, this mid-12 area, mid-1270 area, is also a factor. Not much of a trading level, not for entry points anyway, because as you see, we have sailed through it a few times. But I would suggest that we're going to be, the market's more negative if we hold below 1274. Today, the trend line comes in at 1286, 1287, and I think this area is more important, as you know. 1292, 1294 above here would be a buy signal. Silver getting quite volatile. As you can see, we're tangled up in the midpoint of the Bollinger Band at 1493, and the 200-day moving average just fractionally above there at 1494. So that's clear resistance. We've managed little spikes up to 1497. Yeah, 1497. So we're going to have to get up through 1500 for any form of recovery, although I don't see the recovery going too far. We've got 1508 as the highs. 1508, 1509. Yeah, these little spike highs up to 1511 maybe. So 0911 is the next resistance level if we break above $15. Oil's been tricky. I have been quite negative with oil over the last couple of weeks at least, but it's quite difficult to hold a short position, and yesterday's a classic example. We gapped lower below the trend line, plunged to $60. Now, did I have that as a level on the daily chart? No, we broke through that 60-70 area and plunged to the nearly to $60. I'm not quite sure why we bounced from there, but we did see a strong bounce in line with the stock markets, really, when investors decided that Trump was probably bluffing. We pushed up through 61.60. So you can see we spiked above the trend line and the 100-hour moving average, but we're back below it now. So I would suggest that 62.35, 62.55 is resistance. we'd have to get up through yesterday's high of 62.95 for things to look more positive, for us to confirm some sort of bullish breakout, and then we can head towards 63.30, 40, maybe 63.80, 90, which looks like a good resistance level with the trend line and the 500-hour moving average. Those are the levels I would trade. Some support down here at 61.60, 61.70, 61.60, yes. Below 61.40 is going to look more negative. Stock markets are becoming a bit more exciting and offering us some trading opportunities. That big bearish engulfing candle you know all about. I wrote an article on it last week. So this trend line comes in at 29.35. Yesterday we peaked just above it at 29.38. But we've come back down again, so it does still look like bears are gaining control. The bulls won't give up easily. The bulls have had it their way for 11 years. They're not just going to roll over and die on a few Trump comments. The short-term chart's a little bit messy, but you do see that trend line. There we go. You can stick that trend line on your own charts. Going back to the low, the low in March. As we rocket this trend line, going back to the beginning of March. So you can see we plunged. I've drawn a little trend line there in as well to see if we form a head and shoulders. And then we rocketed up to the trend line and some moving average action there as well. So we rejected all of that and now we're back down again. I'm just going to open this up again. Where are we? Right, there we go. So it's a little bit messy, but we are developing something of a bear trend. As you can see, we're getting lower peaks and lower troughs. So that is the definition of a bear trend. So right now, the bears are slightly dominating the situation. I'm just going to put a trend line in there and see if this trend sort of accelerates a little bit to the downside. So all I can really tell you is that there is a bit of a negative bias. I'm actually short. I have been since I saw this bearish engulfing candle. I must admit, Friday night I was a bit worried because I didn't expect to bounce back that strongly, and Trump certainly rescued me on Monday. Although I didn't take any profit down here, I'm still short. So I need us to hold below the midpoint of the Bollinger Band now at 29.20, and let's see what happens down here. We obviously found support at the lower Bollinger Band, 28.83, 28.82, but these Bollinger Bands will start to turn and head lower, of course, unless we break to new highs. Dow Jones looks more negative than the S&P, if anything, and actually looks like it's slightly easier to trade. So I could certainly argue that this is a head and shoulders pattern. Left shoulder, decent head, and yes, and now we could be forming the right shoulder. I've talked about this already. I thought that this could be a head and shoulders pattern. There might be head and shoulders patterns within head and shoulders patterns, but anyway, you do get that. One thing's for sure, we had a very strong bounce, which I must admit I probably wouldn't have expected yesterday, but we held a trend line and we held the 200-hour moving average, and we plunged back well below this little cluster of moving averages on the hourly chart. So the bears are gaining in confidence, and we will get these bull spikes higher. That's normal. In fact, in a bear trend, in a bear trend, you get the biggest moves, the biggest spikes higher. By what I mean by that is in a bull trend you get little moves higher. It's pretty boring, a bull trend, but in a bear trend you get these enormous spikes higher, that big short squeezes that catch everybody out. So anyway, this does look negative, and I wonder, similar to the S&P, whether we're forming this negative channel. Certainly the moving averages in the short term look pretty negative. We've even got the 100-hour crossing below the 200-hour, and it won't be too long before, the 500-hour rather, won't be too long before the 200-hour crosses below the 500-hour. So that'll be another little negative sell signal. Now if I'm right, and this is a head and shoulders pattern, we haven't confirmed it yet, of course, but we will do if we now plunge below 25,900. That would confirm a head and shoulders pattern, so that would again be negative, and that would indicate a drop of around, not quite 1,000 points, but not far off it, another 700 or so. So we'd certainly be in the low 25,000 area. I'm regularly asked by my subscribers and my social media followers which is the best charting platform to use, or which one do I use in my videos, my daily technical analysis and trade ideas videos. So I just want to let you know that Metastock is something I've used for as many years as I can remember now. I've tried so many different charting platforms over the 15 years or so that I've been doing technical analysis. and Metastock is by far the best. The quality of the data, you've got to have a platform where you draw trend lines on different time periods, for example, and they all line up. I've had some platforms where you put a trend line on a weekly chart, you get completely different values than you do on a daily chart, for example. You can't have that. You've got to have something that's absolutely top notch, so that you can trust the data. So without doubt, this is the number one. If you're interested in a free trial, you can just go to metastock.com/day-trade-ideas. That'll get you a free trial. If you have decided you want to sign up and give it a go for 3 months, you can get 3 months for the price of one, which is obviously a phenomenal deal. So just go to metastock.com/offer/trial/3 for 1.